Hi everybody and welcome to the London session update with myself, Kathleen Brooks, on Tuesday, the 16th of July 2013. Well, it's been an interesting day. A lot more fundamental economic data coming out of both the UK, Europe and the US, especially compared to the last few sessions. And of course, we're leading up to some major events. First of all, the Bank of England minutes tomorrow. And then, of course, we get that Bernanke testimony to Congress, which kicks off tomorrow as well at 3 o'clock. And we have a Bank of Canada meeting. So there's no shortage of fundamental stimulus for the markets this week. Today, we had a deluge of inflation data in the UK. It was a little bit under expectations. In the US, it was a bit of a mixed bag with headline inflation stronger than expected, while the core inflation that strips out energy and food prices fairly weak. Now, what has this done to cable? Let's take a quick look. As you can see, cable very much in consolidation mode at the moment. That is because, yes, the inflation data is important and it did rise to 2.9%, but that was slightly lower than the 3% expected for June. But everyone is really looking to those minutes from the Bank of England meeting tomorrow. Now, normally the minutes are considered a bit outdated. They're not necessarily top-tier economic data. But this month's meeting, from the meeting that was earlier in July, all eyes are on these minutes, because that is the first time that we'll really get some in-depth look or a window into what Mark Carney thinks, the new governor of the Bank of England, and how he may act going forward. So there are a few things we're looking for from those minutes. Did Carney vote for more QE? Did they talk about forward guidance? Did he get other people to vote for QE with him? Now, if any of those things do happen, then we think that could be quite negative for the pound. As you can see there, the pound is consolidating in a triangle pattern. It's really quite directionless at the moment. We had been above 151 earlier, but since then the dollar's really got its groove back, and we've actually dropped back quite substantially below 151. But it's if we get below 150.50. Now, that is support on that triangle pattern, as you can see. If we get below there, then that really opens the way to 149.80, back towards those 149, back towards life below 150, towards those 149.50 lows that we saw earlier last week. However, obviously, if it's slightly more hawkish than expected, then we could get back to 152, which is really topped the upside in the last few sessions, potentially even back to those 153.10 levels. We tend to think the bias is that they'll be more dovish than expected, and that could really push us lower. But right now, the market is waiting for direction from those Carney minutes before they move on cable. What about dollar yen? Well, dollar yen has been fairly range bound itself the last few days, but after that kind of weaker, or that weak tone to the core CPI data out of the US, that really has changed some minds about the prospect of tapering potentially, and also how dovish Ben Bernanke will be in tomorrow's testimony. Now, we tend to think that he surprised the markets enough last week, what with his more dovish than expected testimony. If anything, we think he'll try to do a high wire act during his testimony to Congress tomorrow, but without any of the excitement, really, because the markets know that, yes, his personal view is dovish, but overall more than half of the FOMC members are looking to start tapering and potentially even ending asset purchases by this year. So tapering still very much on the cards, even though Bernanke is likely to have quite a cautious tone. What the markets may have to get used to is that this cautious tone doesn't necessarily mean that tapering won't happen. Now, this chart in front of you is dollar yen and also treasury yields minus Japanese bond yields. So you're seeing the spread there between US and Japanese government debt, 10-year government debt yields. And as you can see, the spread has really backed off a little bit as treasury yields have fallen in the last few sessions. And that's really limited where dollar yen can go. Now, dollar yen, it has been just oscillating around a very key level, 99.50. That is key support. It's the 50-day moving average. We have tested down there, but not in any sustainable way. But it does suggest that over the next 24 hours, we think we're going to be in a bit of a range between 99.50 on the downside, 150 on the upside. We haven't really managed to sustain gains above that key 100 level so far, but it's all going to be down to Bernanke. And if he essentially, as I just said, suggests that tapering is definitely going to happen, even though he might be more dovish than the norm, then we think we could see dollar yen just grind higher, maybe get back to those 101.50 highs from earlier last week. But overall, an awful lot going on this week. Good luck with your trading, and please do join us soon for more. Thank you.